It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, August 23rd, 2016. Boy, oh boy, we had some wacky price action in today's session, but if you followed the plan from last night, didn't stop us from finding some excellent tradable opportunities today. And of course, looking at the charts for tomorrow, we see a lot more of the same. Got some very interesting charts to look forward to tomorrow. Crude is bullish, S&P and Euro are bearish, and gold is looking a little bit wacky here right now, but trading sideways as we look forward to Wednesday's trading session. I have another jam-packed newsletter in store for you guys full of learning and earning opportunities tonight. Before we jump into our charts, though, and put the plan together for tomorrow, I want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link right in the description of the YouTube video. That'll take you over here to our blog. Come over here to the blog and join me for the full-length version. While you're here, don't forget, if you're not a member here at School of Trade, I got a free pass for you in the upper left-hand corner. Come out and join me in the trade room this week as a guest. In the lower left-hand corner, you can join the mailing list. I'll send you an email every evening when our nightly newsletter is ready. That way you never have to worry about missing another newsletter ever again. Below the video, you can download all the charts you see me using in tonight's video. Nice and easy. You'll have those charts ready for tomorrow. And of course, over on the right-hand side of the blog, don't forget, you're going to learn more with me in 1 week on my free trial than you will anywhere else. And I'm always standing by here to help you guys out 24/7, 365. If you need any assistance, hit me up on the live support button on the right-hand side of the website. Hope you guys are having a great week so far. I got a big rest of this last full week of the month coming right around the corner. Tomorrow's Wednesday, August the 24th. Let's check out and see what our news looks like tomorrow for a Wednesday. First things first, though, anything out there tonight? No major market movers tonight coming out of Asia or Australia. We got some minor report there from our good friends, the Kiwis, but nothing too dramatic there coming out of Asia tomorrow, or should I say tonight. And of course, we look forward to tomorrow's session, a Wednesday session. I know, first thing you should be thinking about if you're a crude trader or an S&P trader is we have inventories tomorrow. And of course, every Wednesday morning at 10:30 a.m., unless, of course, Monday's a holiday for some reason, right? Every Wednesday we have 10:30 a.m. inventories. Remember, my rule of thumb is my cutoff around inventory is going to be 15 minutes before and at least 10 minutes after, so we'll go 10:40. So 10:15, the cutoff ahead of crude tomorrow, and we'll wait. Give it about 10 minutes after the news comes out at 10:40. We'll be back in the action looking for additional tradable opportunities. Don't forget, Wednesdays are oftentimes a day of lower volume and more range-bound sentiment on the oil markets just because we have such a dramatic news report coming out middle to late morning, right, for the crude traders. So be aware of that. And also, too, remember, S&P loves to shadow crude these days. And so don't forget, around 10:30 tomorrow morning, you may see kind of a sympathy rally, if you will, right, on behalf of the S&P traders, kind of piggybacking on the movement from crude. Last week, we did not get a correlation last week. So you know what I always say about correlations, you got to wait and see more when it happens. But be aware tomorrow, we got that big news at 10:30 for crude traders, and then maybe for the S&P, we'll see. You know, I always tell you guys, just trade what you see in your chart, right? So if you see the S&P moving at 10:30 tomorrow, you'll be able to put 2 and 2 together, right? That it's going to be an inventory move. Other than the inventory report tomorrow, we've got some real minor news coming out of London and GDP from Germany. I don't think any of that's going to move the markets here. And then we have what will be an important number tomorrow morning, 10 a.m., existing home sales. This, of course, being the last week of the month, we're going to hear all those home sales numbers. Pretty impressive new home sales in today's session, right at 10 a.m. We talked about that last night in the newsletter. Tomorrow we have another housing market report at 10 a.m. And again, I think all eyes, though, for crude traders tomorrow will be on the inventory number at 10:30 a.m. So really all the market moving events will be in a middle to late morning of the session tomorrow. Again, watch out for crude. S&P, a little bit there. Everything else should be pretty much wide open there tomorrow for a Wednesday hump day session. Don't forget, we open up our chat room tomorrow morning. Chat room's open all day, of course, but we'll be in the chat room tomorrow morning as of 3 a.m. Eastern time with all of our London-based traders. And, of course, at 8 a.m. Eastern time, the trade room with all of our U.S.-based traders, all of our advanced members with me tomorrow in the trade room at 8 a.m. Eastern time. Get the schedule for tomorrow. Mark that calendar. Mark the alarm clock for the inventory report. And let's jump right into it here. Crude oil's bullish, trading at the lows of the range this evening. Buyers have control at this time and will be looking for seller failures at the lows of the range with a target back to the highs, or a strong breakout pullback to new highs with a target at the 48.78 range expansion, and possibly a measured move tomorrow. We'll have to wait and see where that measured move will be calculated, of course, as this thing pulls back. Sellers must assume that buyers will be here at the lows of this range, so they need to wait for them to fail, buying at the lows, right, to look for a strong breakdown that can get the moving average below that rate, that trading range. So again, we have to assume now that that buyers will be waiting at these lows, and so the only real way that the sellers can get involved here is to wait for the buyers to fail trying to buy the lows, or they need to look for a strong breakdown that can get this moving average below the range, and then look for a pullback on the way back to the low of day. As you can see here today, it got a little bit wacky out there in today's session. Bears had control for most of the morning here this morning until we heard a little bit of a snafu coming out of Iran. This is one of those examples of where news may send this price up today, but we may end up seeing this market right back to where we came from at middle to late morning this morning. So right now, bull move, right? Bull move into a trading range. That bullish move into a trading range tells us we expect buyers to be waiting here, right? Buyers waiting to buy the low of that trading range, right? We expect to see buyers waiting to buy that low back up. So what's the best way we're going to buy that low? At the low of the range, I never recommend just buying it. I always recommend looking for seller failure as this price tries to go lower. Let's change the color of that, Joe. As the price goes lower, seller failure, right, to buy the low of that range. It's either that or the buyers have to get a real strong is the key word there, breakout pullback to allow that moving average to get back above, so they can buy the pullback above the high of the range, right, and above that moving average. So assuming here now, right, assuming buyers are waiting below the low of this trading range, buyers are looking for seller failure at the low. Watch out for that falling resistance trend line. Probably not going to be able to get the full thing right up to that high of that range, but that should get you most of the way up there. And then, of course, once we get to the high of the range, we assume sellers will be there selling. We assume buyers will be taking profit. And I always look for a real strong breakout, one of those breakouts that is so clear to the bears that they're not going to be able to sell it or fade the highs, and strong enough to get the moving average here, right, to come back up and allow those buyers now to buy it both above the high of that range and above the moving average as it pulls back, right? That obviously will be the most important part of that breakout pullback. And of course, targets now up to the upside, targets are pretty easy. Obviously targets back to the high of the range. Targets up next will be what we call the range expansion up at 48.78. And then of course, this measured move, it's very difficult to tell where that measured move will be, but we know that as this price pulls back, the deeper it pulls back, come on, Joe, get your act together here. The deeper it pulls back, right, that will keep bringing that measured move down, right? So keep that in mind as you go higher or as you pull back here lower tomorrow. What about sellers right now? Well, in all reality, sellers really have a difficult spot at this unless looking at two things right now. First of all, what the sellers really want to see is they want to see this thing just blow this thing out, right? Get below the reversal line, get below the gap, get below the battle zone, get this moving average coming back up around, right, and get that next pullback back down. When you think about a breakdown, you got to be thinking buyers are going to be buying the low here because, no matter what happened to fuel this move higher today, it doesn't matter. It's a bull market with that trading range, and so buyers will be waiting below that low. Only way to get those buyers cleared out is to run through these lows here, right? Really get a strong breakout. This is the same thing you'd be looking for at the top of that range. You're looking for enough of a punch lower so that buyers don't dare buy into it. And at the same time, it's strong enough to get that moving average to come back down, right? Give us something to sink our teeth into as it pulls back to that moving average, right? What you don't want to do is try to sell into a move that just barely breaks, right? And then, of course, right, moving average, you don't want to try to sell that one, because then, of course, that one you're now selling into the low of the range. You don't want to sell in the low of the range, right? This thing needs to be strong enough, right? Strong enough of a breakdown to basically tell all the buyers, back off, get that moving average, right, to come on down. And then, of course, don't forget, that's where if this breakdown isn't strong enough, buyers will still be looking for that failure, right? But if it is strong enough, the buyers will know the odds are very low that it fails, and that sellers will be attacking, right, that next pullback. It's definitely going to be difficult, but it's definitely possible if these bears can get a nice big run just punching through these lows right now. Now, here's another thing to consider as well, is that as we go back into this range, breakout pullbacks, this of course would be the least reliable. It'd be a buyer failure. Definitely not going to be the most reliable. This would be the next option here if we did try to go into that range, pull back, and can't hold above that 47.57, right, that low of that trading range. Again, doesn't solve the problem of telling the buyers to back off. We assume buyers will still be waiting there, but that will be the next option here. And then, boy, up at the highs here, of course, if we do make our way back to those highs, this is where sellers can get a little bit aggressive here. What happens quite often is you see these breakouts that pull back, they end up getting below the high of that range, right? And of course, that's the spot that you don't want to be buying. You don't want to be buying into the high of that range. That's what we talked about earlier. We want to see it really break through, right? So we can hold the pullback above it. If it doesn't get a very strong breakout, you can look for that little scalp fade. Just be aware, though, unless we see a real strong breakdown and hold the pullback, this is a bull market. So trying to sell the high of a bullish bias trading range is always going to be a little bit challenging, right? So look for a scalp first and then try to hold that thing down to the low of that range, right? It won't be until we can hold a pullback to the downside this becomes a bear market. Watch out for that deep pullback. Let's see how far it goes. I think how far this pullback goes will definitely give us a lot more information here in the next few hours here. And of course, we'll be with our students tomorrow morning live in real time at 8 o'clock Eastern time. E-mini S&P. Yeah, we're bearish and pulling back into the battle zone this evening. Sellers have control and will be looking for traps and buyer failures to avoid selling into the battle zone support area, or they'll look for a strong breakout pullback that can use the reversal line at 84.5 on the way back to retest the lows. Buyers need to stay patient and wait for this market to turn directions with a strong breakout above the high of the channel and then successfully hold a pullback not only above the channel high but above the moving average for a move back to the all-time highs and a possible measured move. Boy, it's amazing how stingy this market has been, continuing to break through new all-time highs. What's the first thing that comes to mind, though, when you see this chart? It looks really choppy, doesn't it? Right? It almost looks like one of those caterpillars, right? Kind of, inching its way down here right now. But that's the first thing that comes to mind when you look at this chart. It had a relatively easy first start, but look at this at all time. This looks like a market at all-time highs. Remember, guys, whenever a market's at all-time highs or all-time lows, it's always going to be some of the most challenging price action that you're going to see. Combine that with, of course, the normal lower volume environment that is summertime doldrums in the equity markets, and you've got a somewhat, well, I think the more challenging of the four markets right now, just because of the personality that we get when we're at all-time highs. So we punch up to new all-time highs and then just grinding lower here. Look at the grind. Now, when you see a grinding market like this, the last thing you want to do is sell low and buy high. It's kind of a joke that we have about the S&P, but the S&P is a market that the best time to sell is after a really big bull bar, right? The best time to buy is after a real strong, right, real large bear bar, right? So we kind of joke around by saying, because that's kind of the